So now the question is, where do we put money in? And there's a few different options. So I want something that is correlated to Ethereum itself, but that is more volatile and that I can put a range that is more short term. I think Ethereum will do well for a longer period of time, but some stuff may actually do really well short term, and maybe I want to exit out of those high risk position before. There's many other things like Uniswap and so on, but I think those two are known to be very highly correlated.
It appears that the SEC has dropped any kind of pursuit of any legal action against Ethereum. What do you make of this?
Yeah, to me, that's a very big deal, and the market didn't react that much. And I think that's only because of the market condition. The market was very volatile and all that stuff. So I think it has not been absorbed, but it has big implication for Ethereum itself, for the entire ecosystem of Ethereum, and also for probably any other token that have been attacked for similar reason by the SEC. So, like there was a large list of tokens that were labeled as securities. And I think we would have to take a deeper look at which one of them probably will be able to be free at this point, because there will probably be a pump on those. I'm guessing once the market react to that.
We're not financial advisors. We're not legal advisors here. But in the case of Ethereum, it started off as proof of work, and then it
Yeah.
transitioned into proof of stake. Do you think that because it started as proof of work, that there's a little bit more of a wiggle room there, as opposed to say Solana, which has been proof of stake from the very beginning? Do you think that they're up against a taller battle, so to speak?
I'm not sure because a lot of token were being attacked because they had unregistered securities the way they were built. Ethereum was a proof of work and the way they did things was different. When the SEC attacked Ethereum, it was strictly about the staking mechanism because it was proof of stake. And it was not Ethereum itself that was at fault. It was just the staking mechanism because it's some sort of expectation of profit. But I think it was necessary for security reason and basically secure the network. So it's not like any project that offers staking. A lot of the time, it's not to secure themselves. It has nothing to do with this. It's just to take out some supply from the market, in a sense, to lock tokens. And when you give yield for that, the stakers don't really contribute to your ecosystem in terms of adding security and stuff like that. So I think there might be some difference there. I'm not a lawyer either, so I'm not sure. But like to me, that was Ethereum was not a problem. It was the proof of stake mechanism in this case that was being under attack.
And I think that's why a lot
So
of people think that all proof of stake chains now are going to be deemed a security. And so when you look at what's going to be the next ETF coming down the pike, is it going to be Solana, or is it going to be like Doge, which obviously complete opposites of each other? It remains to be seen. But the biggest hurdle for Solana is the fact that it is proof of stake, I believe, and the fact that it has been deemed a security. But to your point, there is a difference between some of these chains in terms of are they proof of stake because this is part of their working mechanism,
yeah,
or is it more of just a way for them to, generate yield? So,
yeah, that's thing. So when I saw that news, I was considering making a trade on Solana also. Um, but the thing right now, Ethereum is doing very well, and it's basically the meme coins are not as attractive right now. So Solana is suffering a bit from that. So I think we may have at least a few more weeks potentially before Solana start to pick up again. So it's on a downward trend. So right now I'm open to make a trade right now on the ecosystem of Ethereum itself because we already have a Ethereum Bitcoin grid bot that is active. So I'm thinking to, and I'll share my screen. We can go over that stuff, but I think to me, I think Ethereum will do very well in the entire system ecosystem potentially very soon. So I want to capitalize on that. So this is the grid bot of Ethereum and Bitcoin. So it's been active for 7 days now. Uh, I've done only 1.15% of matched profits. So to me, that is still too low. I wanted to make my range more tight so that this would be better. And it turned out that I really didn't make it tight enough, to be honest, which is fine because if you make your range tight, that means you sacrifice some potential upside once you're deeper in the range upward. So I sacrificed some short-term gain to get more long-term gains. But right now I'm feeling a little bit of the pain of that. So what I would like is that I can take some money out of there without closing this bot, keeping it active, and then I can put this into a new bot of something else. And this is what I'll do. And I think the match profit is 1.15%, but overall in 7 days, I'm up 10.5%. So that's still very good. It will bring back my average decently for the month. It was a bit down. But yeah, so and you see my liquidation price is very low. And I think that the current price is at 0.054. So I think and I think what I've noticed also is that I didn't suffer at all recently when the market crashed. And the reason is because both Bitcoin and Ethereum didn't crash that much, but they crashed together. So technically speaking, that means that my bot didn't crash at all because it's not paired on USD itself. So that's the advantage of this. This is very resistant to a market crash of crypto. So I kind of very much like that. But I think I feel that the match profit is not as large as I would like. So let me take some money out. And I've never done that before, so I'm not entirely sure how it works, but I'm afraid to remove too much. So I'll just remove 0.01. And see, it doesn't change my margin ratio that much at all. So I think that should be safe. Occupied margin after decrease.
And
Yeah, I think it
for
should
the
be fine.
record, you're doing this on Binance, right?
Yes.
But this can be also done on Bybit or other,
Yeah, a
most of
lot of
the other
those.
exchanges.
Yeah, exactly. A lot of those grid bots have a way to remove some money that you've accumulated, which is basically what this is. Okay, so that's done. So now the question is, where do we put money in? And let's say for me, there's a few different options. So I want something that is correlated to Ethereum itself, but that is more volatile, and that I can put a range that is more short term. And let's say technically speaking, I think Ethereum will do well for a longer period of time. And but some stuff may actually do really well short term, and maybe I want to exit out of those high risk position before. So I know that ENS, it's the Ethereum name services, is highly correlated to Ethereum itself. And then Pepe is also highly correlated to Ethereum itself, because those two things are on the Ethereum main chain for the most part. And there's many other things like Uniswap and so on, but I think those two are known to be very highly correlated. So let's take a look at them. But so over a period of on a weekly basis, what I don't like about
So
ENS.
Patrick, real quick, while you're doing this,
Yeah, go ahead.
quick question. So in terms of the narrative that you're thinking for Ethereum, you're saying that it's going to be the native Ethereum applications that you think are going to really shine, and not necessarily layer twos, right? It doesn't sound like you're very
No,
excited about layer twos. You're more excited about the applications on the native chain.
no, the layer two should do well also. It's just that there's a lot of layer two, and a lot of them have a lot of token unlock coming and all kinds of baggage like this. To me, the thing I'm very much tempted that Pepe will be my choice. And we can discuss that, but ENS, as you can see, they launched in 2021, and then there was the big market crash. So there's a lot of baggage from that of underwater investors. So I don't know if they all have exited already or not. So ENS is still doing very well recently, but I'm a bit afraid of that overhang of the past in a sense. And I think ENS itself, let's take a deeper look, but uh,
Yeah, and for those at home, I mean, this is obviously not financial advice. Don't go in putting in your life savings into Pepe. But Pepe is more in a price discovery, right? I mean,
Exactly.
it hasn't been around the previous cycle, and so the potential is unknown versus ENS is from previous cycles. And so for
Yeah.
psychological purposes, for a lot of people, they feel like there's a ceiling to that specific.
Yeah, the thing it's that overhang here for ENS that bothers me a little bit. It's not crazy, but it still bothers me a tiny bit. And the other thing is that the market cap compared to the fully diluted market cap, there's some overhang there also in terms of token unlock. So that's why I'm highly tempted because for me that's probably going to be more of a short-term trade in this case with a tight range. So I know that historically speaking, Shiba Inu and Dogecoin were able to reach a market cap of like 30 billion in the last bull market. So even Shiba Inu right now has a market cap of 10 billion. But this was as of overhang from 2021 also, as you can see, the compared to the all-time peak, we're significantly below. So that's why I chose Pepe. Shiba Inu is on the Ethereum chain as well, but I chose Pepe because it's brand new of the cycle. Nobody is really underwater. There's a tiny bit here that has gone down, but it's not massive. And meanwhile, it's 5 billion. So if it goes to 30 billion, that's like it's a 5x, actually 6x, which is not bad at all. So that's why I think I'll go with Pepe in this case. I
Patrick, why
typically
not
speak
some of the tried and true DeFi plays on Ethereum, like say Compound, Aave, or Lido? Why not the DeFi of Ethereum?
I've considered that also, but I just feel that typically speaking, meme coins, the volatility is much greater than most everything else. At this point, it's a short-term trade, so I'm not there for the next 10 years. So to me, like I would invest something with the utility and solid, protocol fees and all kinds of stuff like that, for more long term. But in this case, it's just going to be a smaller percentage of this that I put into it. So I think I prefer just the pure meme coin in this case because it's highly correlated. All right,
Pure
so
speculation, right?
yeah, pure speculation. So then I have to decide what my range will be. Oh, and the other thing that I considered is whether or not I should do it on a decentralized exchange in a pair between Pepe and wrapped Ethereum itself. And I think for the people who cannot use Binance, maybe that's something to consider to just go and add liquidity on the pair itself. This means that as Pepe goes up in price, you're basically selling your Pepe to buy back Ethereum and you're collecting fee along the way. So the impermanent loss is not necessarily a bad one in this particular case because you'll just be accumulating Ethereum as the price of Pepe go up in relative to Ethereum itself. So and I think if you look at recently, since that the big spike here was when Ethereum got approved as an ETF, and this is the Pepe versus Ethereum. As you can see, it has been in relative strength compared to Ethereum in the last little bit. So this is kind of what I like here about this.
What
And that was
exactly is that timeline?
each bar is 1 week, so it's a very long time frame basically.
What about before the Ethereum ETF approval? What was the correlation there?
No, that the correlation was still very strong, but Ethereum was basically flatline or losing ground compared to Bitcoin and most of the market. So none of those things were doing that well. I think now it's the right time for Ethereum to shine. So that's why I think banking on something that has more volatility but is highly correlated to Ethereum but is in a relative strength is might be a good choice. And I think right now, like there was a big pump, it retraced, and just for information here, let's say that you take your Fibonacci tool to the top of that peak here. Maybe that's a bit small, but the 618 was here, and we spike a little bit further down than the 618, but then it recovered from there. So I think the Fibonacci retracement still seems to be doing not so bad in this case. And that's what is typical with a lot of meme coins that they do well in terms of TA. It's kind of predictable because a lot of people who play meme coins are traders. So it kind of behave relatively well in terms of technical analysis. So now we've had a retracement that is like pretty close to the 618 from that range also. And now I'm trying to evaluate what should be the lower and upper range. So what I'll probably do is go from here is like a few zeros and 9. And this is a 1,000 times of Pepe basically. And then I'll probably go to 17 here. So I'll go between that range. So I'll try to make it a bit more tight. So I think, and if the people don't like Pepe, they could probably just consider ENS. Like I'm not repulsed by it that much. It's just in this particular case, ENS is not a bad one. And they also have the coin M that we discussed in the past in terms of on Binance. That means that it trades on itself. So that might not be a bad one, but let's go with Pepe. So in this case, Pepe doesn't have a coin M, so I'm forced to do it on USDT. But in this particular case, I want the extra volatility, so it's going to be a bit more risky. But at the same time, I'll put a range that is relatively safe. And I'll go a little bit lower leverage. So I'll activate this. It looks like it may be a bit slow to do its thing with the VPN. So I can send you a screenshot of the setup. I think it will be between here, like 0.009, like on 1,000 times Pepe. I'll go between that range. I'll do 5x, I guess. And let's take a quick look on a more short time frame.
So you're saying your conservative thought process is that Pepe can do 5x.
Yeah, but I'll be cashing out before it does 5x. So the thing, I'll just basically trade it between this range here and the upper range here. It could go down significantly, so that's why I'll do it like that. But okay, so I'm here. Let's do it now live. Yeah, so the thing, I'll do this. And the thing that's 0.17, we got very close to it in not that long ago. That was in the 27th of May. So it was after the initial push when Ethereum got approved after the related to the ETF. And then it has gone down quite a bit. And yeah, I think it's a relatively good range. I cannot put more of those things. I need to transfer again.
So what exactly are you doing right now?
I'm moving money around again, and I'll need to find where my money went again, like last time. It's when I took the BTC out. I need to convert BTC now to USDT so that I can activate this bot. But I can do that after.
I think we're all asking where our money went right now, Patrick. I think right now where we are in the market, a lot of people are asking that question.
Exactly.
Okay. Anything else to add about this this trade that you're making?
But right now I want to make sure. Okay, yeah, I'll go on a. No, I'll go with a little bit more risk. I'll go with a 10x. Yeah, I'll go 10x, and I'll put like I got 0.01 BTC, and it's about 65K. Like 650 times 10. So it will basically be putting a 6.5K into this trade, and we'll see how it goes. And I think hopefully the range is tight enough that it trigger often enough, because I think Pepe is quite volatile compared to Ethereum. So yeah, that's what I wanted to discuss today. I'll send you the screenshot once it's been activated in a few minutes after this.